Huge loaded question. How do you help folks navigate the complexities of when they should file for Social Security?
No, yeah, it's a really great question. It's a hot topic, especially this current year you're in. You're always hearing about Social Security benefits and taxes. So it's, what is that magic number to me? And so many people assume full retirement age, typically age 67 to get more money out of it. People assume the younger age, typically around age 62 and a half, I can't get as much, but it's not that simple though.
Right. So talk about why it is so complex. Because there's over 567 mathematical calculations and permutations of how someone can claim Social Security.
Yeah, I mean, just because you can get more money at age 67 compared to age 63, it doesn't mean it's better because now you've had that time. And there was a great article I read years ago by the Journal of Public Accountancy that said it's 13 years to break even typically. So if someone takes money at age 63, someone takes at age 67, it would take 13 years from either age to break even because of the time value of money you lost waiting until age 67. So it's not an always easy answer, which is why for everyone's own situation, we look at your own unique value to say, hey, what's best for you? What age is best for you to optimize your value?
Well, and you mentioned a couple different ages. Obviously, 62 is the earliest that someone can claim, but they're going to get a reduced benefit. If you wait till your full retirement age, you get 100% of what you're entitled to. But then there's that 8% increase per year until age 70. So that's the other consideration, right?
Because that's the whole 13 years of the Journal of Public Accountancy. Yeah, you waited until age 70 maybe, but if you would have took it 7 years ago, that's 7 years of cash flow you lost out on now, 7 years of compounding interest you lost out on. So it's potentially better to take it earlier or later. But again, there's no right or wrong answer until we see your own situation.
There's a lot of talk, one of the big buzz phrases, if you will, is how to maximize your Social Security. And obviously, if you wait till 70, that means you're going to get the biggest amount. But really, what you're talking about, it's about optimizing, and that's different based on your individual situation.
It is, yeah. Another big thing is too, like a fixed income annuities is another big example where it could be deferred. So a lot of times we'll say, well, maybe we could put some of your money, a Roth IRA income annuity as an example, into here, and maybe we turn on Social Security at age 63 because the income annuity can bake longer or wait longer to give you a higher return than Social Security benefits could have.
Right. Interesting. Now, it also depends if you're single or married. So talk about how that can affect the Social Security conversation.
Yeah. So it's all about taxes in the end. Someone who's single is going to pay more tax than someone who's married. But eventually, we all end up in the single tax bracket. Whether your spouse is going to be dead or whether you get a divorce or you're single already, we're all going to be there. So eventually, if someone is married, typically what we'll look at is the full retirement age. People don't know this, but as long as you're married for at least 10 years or you're still married now, the lower income earning spouse can get 50% of the higher income spouses at age 67.
The spousal benefit, right?
Correct. So for example, if spouse A made $4,000 a year at age 67, but spouse B would only make $2,000 a year at age 67, sometimes we say, well, maybe it's better off you take the higher benefit and waiting that long.
And then allowing it to grow.
Correct,
right? Yeah. Well, and obviously then you mentioned this, that most folks end up in that single bracket down the road. You're going to lose one of those two Social Security checks, but you get to keep the higher of the two. So that has to come into play as well, right?
It does. And people don't know there's three big taxes on the benefits itself. There's 0%, 50%, and 85% tax on the Social Security benefits, which is why we want to have more money into like a Roth IRA type environment. That way, the more money's in the Roth IRA, the less tax on the Social Security benefits you actually have.
So how do you go about, when you're building a comprehensive holistic financial plan for folks, how does the Social Security conversation and question fit into that plan? Yeah,
it's in every plan we should do. We always want to show you the net after tax result, how much money you actually keep. And then we'll show you those things on, is it better to turn it on earlier? Is it better to turn it on later? And we go over the pros and cons with you in our planning process.
And you're able to give that personalized advice, which they can't get from anywhere else, right?
Exactly, yes.
Yes. Well, if you have questions about Social Security, it's important to know that if you call the Social Security Administration, they can give you information, but they are not allowed to give you personalized individual advice based on your situation. So we encourage you to get that advice by contacting David.